Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise.
Let me ask you something, man.
Don't stop. I'm not finished yet.
Do you ever ask yourself,
Don't stop. I'm not
when are
finished
they ever
yet.
gonna stop? Do you ever ask yourself, when those bad boys are gonna stop making all that money?
What's up, my future 1%ers? This is Marathon Money, brought to you by MarathonMoneyPlus.com. I'm Cam Jones, the prince of the stock market, a.k.a. your favorite billionaire's favorite thousandaire, and I'm with the big homie, Kenny Coins. What's up, man?
Man, it's been all good. Been all good.
Stock
A lot
market
of
action
pickups this
coming up.
week. Yeah. The earnings, man. I think earnings brought a lot of stocks down, so there was a lot of pickup. It had to be.
Yeah,
Dude, I
it
hope
was-
everybody was picking up.
earnings is weird like that. Like, you'll see a company that beat top and bottom, but maybe they don't guide for the future exactly like what everybody likes, and so then they hit the stock for like 20%, you know what I'm saying, or you know, something like 5-10%, something like 20% is extreme. So earnings, man, earnings is just a real volatile time, and you really got to pay it if you like want a stock. Let's just say, you know, Tesla or something like that. You want that stock, and it's earnings day. You probably just want to wait until the market closes, because even before they report earnings, stuff starts to get real wild and volatile. Maybe you can pick it up at a cheaper price, and then after they report
Yeah.
earnings, something happens or whatever. But it's just real wild time when it's earnings for these big companies, man. And then
Everything is choppy.
yeah, it can scare you out your position too. You know, because stuff start to
Yeah,
move
everything.
more aggressive than normal when it's earnings week or earnings day. You know what I'm saying? Especially if you report in the evening. If you report in the morning, it's going to be that previous day that's going to be real volatile and aggressive. But man, what you think about like the GDP numbers? You know, data says that we're supposed to be in a recession, but it, you know, I don't know.
Man, I honestly think we to tell you the truth, I honestly think we want to be in a recession. We talk about it so much.
Yeah.
Definitely in the news. But the truth is, we are in a recession because inflation is at 9.1. Not only that, they confirmed there'll be another interest rate hike at the end of the year.
Yeah, but they said it's not
Uh,
even gonna be. It's gonna be like real low though.
Man, the thing about it, they already did it so much. You know, if they add a whole 1 point again, it's not gonna be good for nobody.
Mm-hmm.
Period. But they gotta compete with inflation. And the thing is that it's gonna change because we have another inflation indicator in September. So if it goes up to 10%, they know for a fact it's not gonna be low anymore.
Man, it's
just
basically at
know-
10% now. I mean, you
Yeah,
at
they
9
get
something,
10%
but
now.
yeah, you round up, you at 10%.
Yeah, and you know we're not gonna know if it's really at 10% till September. But I'm gonna tell you right now, we got a long way before the end of the year, long and short ways before the end of the year. And I think personally, inflation is gonna be at 11%, and then they're gonna say we have to compete with inflation, and they're gonna throw 1 point on there.
Mhm.
That's exactly what they're
That's
gonna
going.
do.
And,
And
okay,
that's-
so you thinking that even though they said like, man, we don't plan on having a big rate hike, things will change. Like as far as like, you know, the data, the numbers, and you're saying like, okay, we can't do what we said because we have to compete with inflation.
Yeah. And that's what people keep forgetting that because I think we got used to the high prices now.
Mm-hmm.
We just we're getting to the point as society we accept it. Just like we accepted the COVID. We accept it. All right, we in the house now. We accept it. You know what I mean? I think we got conditioned to accept stuff even when it's bad,
Mm-hmm.
and people are not fighting as much. It's like, things are high. Yeah, I used to spend 20% of my paycheck on groceries. I spend 60 now, but hey,
It is
like
what it
we
is.
accept that.
Yeah.
It is what it is. You know what I mean? I don't think we're really gonna care until I say this: the people that live on food stamps, when you get in that money and you go to a store, your little $500 you get, $600 a month is now worth only $50. I think that's when everything's gonna be a real
Yeah.
problem.
Yeah. Yeah.
You know what I'm saying? People are waiting to like, oh, it gotta be a real problem for the rich. No, because there's way more people in poverty than there's the rich. When life is comfortable, you ain't gonna move.
You right. Yeah.
The pandemic proved that when everybody was getting their little $1,000 a week, nobody had the urgency to do nothing.
Right. They quit their jobs. You know what I'm saying?
Yeah, you ain't got the urgency to do nothing. You know what I mean? So I think personally, literally you're gonna get hurt worse until it comes to the point where like, yo, the pain is unbearable.
Mm-hmm. Mm-hmm. Yeah,
You know
I
what I'm
agree with you,
saying?
man. I do feel like we're just accepting stuff like, people would complain about the gas prices being at like $5, but you still go out and buy it. You know what I'm saying?
Yeah,
People will
you still go
complain
out
like,
and get
yo,
it.
even like me, I got I think I got my nephew like burgers, some fries, a drink, something, chicken nuggets. Man, that thing came from like McDonald's. Man, that thing came up to like $9. I'm like, man, what?
Yo, you could, bro. I'm telling you, I think we got used to hearing 4 5, and then bro, I remember grocery store, bro. I bought a juice. I bought a Gatorade. I know it was like 175, 275
Right.
for this. It's not even that good. My first thing, and you start really thinking about it, it's like, and then everybody in line was like, man, yeah, but everything's so expensive. But everybody just accept it. They'll
Hmm.
complain, they'll say them, but nobody's gonna make a move to do anything about it. I
Hmm.
think we got conditioned to like go complain in your crib.
Right.
You know what I'm saying? Like, yeah, it's just complain but do nothing. I think we're getting to that point. But to tell you the truth, personally, the stock market looks good. I'm waiting for that 200-day move. Over the 200-day move, see how things react. Um, hoping pricing's gonna go down. I think that's gonna be a slow.
Which pricing?
Like grocery
Oh,
pricing,
okay.
gas,
Okay.
pretty much all around. Hope things go down.
I'm starting to see
One question I
gas
want to,
trickle down a little bit.
yeah, one thing I want to ask you, man. The housing market is starting to slip down.
Yeah, housing market trash. I mean, but you know what? It should be because it was a year and a half, 2 years of people. You list your house up for 300K. Somebody come in and bid 400 for it. You know what I'm saying? It was just stupid, dumb stuff was
People don't
going on.
realize how bad that
Yeah,
is.
it same thing with cars. Not only used cars, but new cars. You know what I'm saying? You go to a lot for a new car. The sticker price is
Mm.
60K. They're like, well, we charging $10,000 extra fee because of shipping and supply chain issues and stuff like that. So it's just getting out of hand. And I don't know about the car industry, but the housing industry, nobody's gonna buy these houses for above what they're worth and pay 5-6% interest, you know, on
About to
that
be
house.
about to be 7 8,
Yeah.
and they're gonna add an extra point on the money.
Yeah, so I mean that's gonna, that's almost making housing unaffordable. If you go, I think we talk about it on here a lot. If you go back to like the 80s and the 70s, when interest rates were 30% and stuff, but your house was, 12,
Se-
$15,000. You know what I'm
Yeah, I mean, that's different, man. Your mortgage payment was $115.
saying?
know what I mean? Some people you can even say for a 30-year, probably $70. You know what I mean? You make $400 or $500 a month. You know what I mean? It's $80. My point is with the housing market is the thing people don't understand. I don't care if you bought it in cash.
Mm-hmm.
Eventually, the market value is gonna come back to where it's supposed to be.
Exactly. And
You
you're already
bought it for
seeing
you.
houses, the market value of houses going down, like just slipping
Yeah.
down a little bit. Yeah.
Yeah, and it's people starting to feel the effect of that. You buy a house that's really worth $290 for $400K, you are going to get hurt.
That's 2008-ish.
Yeah,
That's-
you are going to get hurt.
Yeah.
You are going to get hurt. 100%. Anything over $30,000 above market value, you are going to get hurt. Because what's going to happen is it's going to come back down to realization. Then after that, it's going to sink down even lower. Because say the house is valued at $290, you bought it for $400K. Now it's going to go back down to $290. Then after that, people are going to get scared and goes like, oh crap, shoot,
Yep.
I'm $150K
Underwater.
upside down
Yep.
on a
Yep.
mortgage.
Then they gonna stop
Boom.
paying
One-
and try to start
Yeah.
over, and then boom,
Yeah.
collapse.
Your house is worth $175.
Yeah.
That's exactly what's gonna happen. Because what ends up happening is people start selling just to get out from it.
Mhm.
And then when you start doing that, what do you start doing? You start selling it below market value.
Yep. Yep. It's almost like stock. You know what I'm saying?
Yeah.
If you come in and you selling a ton of stock because you don't like something that happened, you know, usually when you sell, in order to get that order filled, you selling it slightly below market value, and that's what brings stocks down. Same thing with housing. You know, if you selling it, if the average house in your neighborhood is $200K and you selling, now you the only person selling your house for $170, well, now the value of the houses just went down. They may not have went down to $170, but they ain't $200.
It's $190.
Yeah.
$190, $195. Then another person do it.
No,
Then
yup.
it's $190.
Yep.
Then another person do it is $185. Then another person do it is $150. And then you get to the top of the hill, and then it takes a teeter. One more person does it at $160. Now everybody in the neighborhood house is $120.
Yeah.
That's how it works.
But you owe $210 on it.
Yeah, but you owe $200 because a few people that overbought their house. That's how it works. And people don't think about that, because in the beginning, when everything first started, I would do it too. You come to me and my house is worth $300K, and you say something crazy like $450.
Oh, I'm out.
Pat,
You got this.
everything. We getting out today. Today. You got the money? Oh, you got it in cash? Oh, today. Wrap it up. You know what? You give me an extra 10 G's, you can keep it all. For an extra 180 on top over the house? Oh yeah. Let's go.
For extra,
No, you know what? You can have it.
extra 20,000, I'll be your chef for the year.
yeah. You know what I mean? Come on, man. In the beginning, when everything first started, that means that you could easily get another, because actually you just go get the same house in
Yep.
the beginning.
Yep.
It's when you get to the middle of when everybody's doing it, that's when all the houses are expensive. That's when it becomes pointless, because if once everybody catch the wave and everybody's selling their house 140, 50K, you're just going to be back at the same spot.
Mm-hmm.
All you did was go from one house to another. And then not only that, you probably went to a smaller crib.
Yep.
So that's what's going to be going on soon. So
You think
got
that's
patience in that.
you think that take a big effect on the stock market?
Oh, housing market always does.
Yeah.
Always does, because once people start losing a place to stay,
What you got at that?
sell everything, sell your stocks, sell your investment,
Yep.
all this stuff, and then what ends up happening, people stop spending, because to me, housing market, people try to say, oh, the housing market's down, why is it affecting the stocks? Because when you don't have a place to stay, it's going to affect the stock. A place to stay is like the pinnacle of all things. You know what I mean? It's the pinnacle of all things.
I agree with you. People
Once you lose a
underestimate
place to
that,
stay, you're not gonna be buying other stuff.
and you damn sure ain't gonna be, investing in stocks. If you ain't got no
Exactly.
place to stay, you're gonna be selling your stocks, like what you just said. But I think that it's one of those things where you have to wait and see with the interest rates and stuff like that, and hopefully housing comes down to a normal level so that people, if they do buy a house, that even if they paying 5-6%, at least you're not paying 5%, 5 or 6% on a house that you overpaid for. You know what I'm saying? Because that would be just terrible.
100%. Man, you know what? Something I really wanted to bring up here,
What's up?
and we're gonna talk about it next week on Marathon Money Plus. I want to start talking about getting into rental companies.
Rental stocks?
Yeah, rental stocks.
Yeah, yeah. Like REITs?
No, like U-Hauls,
Oh, okay.
storage.
I got you.
You know what I mean? Because we was talking about small caps
Mm-hmm. On
on
Marathon Money
Marathon Money
Plus.
Plus.
Yeah.
And you know what got me thinking, bro? You know what's the most stable companies
What is it?
that are who start out storage spaces, rental cars. You know what I mean? Needable stuff.
Right.
Like rental equipment. I'm gonna give one out. There's this company called H&E Equipment Services.
Uh-huh.
Yo, basically they rent out different type of equipments. It's been doing good. It's 30. I think it's $30. It's 35. I got it at 30, but it's $35 now. And man, the ticker symbol is HEES. If we're gonna start talking about small caps on Marathon Money Plus, we need to bring in the rental industry.
I'm with you. This look like it this started popping before the market started popping. It looks like.
Yeah.
You know.
But if you ever look at different rental companies like storage spaces, car rentals,
Yeah, I got some storage stocks that I don't have them anymore. I used to invest in, but they paid like a really nice dividend. I'm gonna have to bring up on Marathon Money Plus next week.
But they're Here's the thing: it's not just a dividend, but they're movers too.
Yeah, it's kind of like what you. It's the rental companies and stuff, storage spaces. They kind of like what you said about McDonald's. Or oh man, it was extra said about McDonald's. That like storage spaces, they're also a real estate company. They own a bunch of land, right, for you to store the stuff in.
My thing is that people don't realize storage space companies, man, they're safe bets, bro. They're
Because
cheap.
people just think about the nature of people. People are naturally hoarders.
Hoarders. Facts.
They think that everything that they got it means something. Oh, I gotta keep this. I gotta keep everything. And so you can't keep everything in the house, in the garage, so you get stored. You love that thing so much that you don't think about until you see it. That you're like, okay, I'm gonna put it in storage. I can't throw this away. You know what I'm saying? That's
what I'm saying.
Thing.
Like we need to start talking. If we're gonna talk about, talk about small caps, but with good criterias, and that's something we will bring up next week on Marathon Money Plus. The storage industry, the rental industry, is something I think everybody needs to look into, because there's a lot of companies out there. And I'll just give an example. If you go to like these big storage companies, it's not really a lot of money, man.
Right.
It's usually like $18 a month, $20 a month. It's not crazy money to get it. And you understand, a lot of them are always filled.
Yes. Always filled with junk.
junk. And not only that, you understand a lot of doctors use those storage spaces for old files.
Mm-hmm.
So I might need like a small cap, a storage company starting out, small cap. You know what I mean?
Yeah, that's a good play. I'm surprised we don't talk about that a little bit more, man. Like the storage companies. It's not it's not really like the hot, sexy stock. You know what I'm saying? But those are the ones that's gonna get you that money though. That easy, consistent money.
Oh, 100%. 100%. And I think that's something we're gonna definitely talk about on Marathon Money Plus next week. I'm gonna have definitely a couple stocks for those. Hop on there. Um, this might be a good opportunity to get into a lot of these smaller companies. Um, that's just everybody. If you don't know this as an investor or as a trader, recessions is where the most millionaires are made.
Yeah.
Just
We say that
There's
every time it's a drop. Every COVID. You know what I'm saying? Yo,
Yeah.
this is where you gonna make your money right now.
yeah, right now.
These
Bad
past couple months from January to
Yep.
now, we was talking about accumulating the tier ones, the Apples, the Googles. You know what I'm saying? That's where you make your money.
Yeah, I mean the bigger companies are obviously you can tell they're positioning themselves to make more money.
Hmm.
So you need to position yourself to make more money.
Exactly. That's a Kenny Coins knowledge right there,
Right there, man. Right there.
man. Man, I think we gonna call it a short one today, man. I had to get the coin sound in there. My bad.
Yeah.
So, man, yo, you can follow me anywhere at Camboni11, CAMBONI11. Anything, Instagram, Snapchat, uh, StockTwits, Twitter. Also, download the Trader Champ app. You can find me on there. Also, don't forget to check out, Stocks and Bars podcast, man, from Extra. And where can they find you, Kenny?
Yo, Kenny Con 23 on Instagram, Kendrick Collin, 2 inches in the middle on Twitter. Yo, type in Marathon Money _ on Instagram. Type in Marathon Money on TikTok. You'll find us there. We're gonna start posting clips of content on there. And yo, we appreciate the support. I put a video up last time. We got like 2,000, 3,000 views. It seems like people like those little clips. So we're gonna try to keep putting them up. You're probably gonna start seeing us all over the place. But peace.
Peace.